K2 Asset Management is an Australian-based equity fund manager focused on delivering a strong and well-implemented investment strategy. K2's funds are available for institutional and retail investors and can be accessed directly or via a range of investment platforms. I'm Carolyn Herbert, and joining me at the CEO sessions in Melbourne is the company's Head of Australian Equities, David Poppenbeek. David, welcome back.
Thank you for having me.
So for those investors who aren't familiar with K2 Asset Management, can you tell us a bit about the company, who's behind it and what are your areas of expertise?
About 16 years ago, Campbell Neal and Mark Newman founded K2 Asset Management. Today, we're a listed company. The market values us at about $150 million. And importantly, staff, directors and related parties still own about 70% of the company. Our area of expertise is that we invest in listed companies all around the world. Since 1999, K2 portfolio managers have made about 70,000 investments in 30 different markets all around the world. We've got 9 dedicated portfolio managers who each has about 17 years of direct equity market experience. And in total, we currently manage about $800 million of funds.
So David, how have the funds performed over the past year?
Yeah, the funds have performed quite well. For the full year to June 2015, the average K2 fund has delivered 24.5% return for its clients, and that's after fees. In regards to relative performance, our funds outperformed their underlying markets by on average about 9.5% for the year. So it was a pretty good year.
And has this been reflected in funds under management increasing?
Yeah, it has. Just over the last 3 months, we've seen inflows of around $60 million. And importantly, about 80% of those inflows have been into our global strategies.
And what success are you having with self-managed super funds?
Self-managed super funds is a really important avenue for us. It's where the growth is. If we look at the marketplace for self-managed super funds, over the last decade, the average self-managed super fund's actually doubled in size and has currently got assets in excess of $1 million. Another thing, that over the last 10 years, there's been 270,000 new self-managed super funds that have been created. So currently, in Australia, there's about 550,000 self-managed super funds. So it's a very important channel. And for us, we've got a number of these self-managed super funds that are actually direct investors in K2 Asset Management and also direct investors in our funds.
I see you recently listed the K2 Global Equities Fund. Why did you decide to list the fund and who's it aimed at?
We decided to list the K2 Global Equity Fund because we saw that Australian superannuation funds weren't investing directly in international equities. Less than 1% of self-managed super fund assets are actually invested directly offshore. So it's not that the self-managed super funds are actually against equities. They own, a lot of Australian shares. In fact, the average self-managed super fund has over 30% of its assets invested in Australian companies. That might have to do with a bit of a home market bias. We've all had countless interactions with companies like Woolworths and banks like the Commonwealth Bank, but we've had limited interaction with retailers like Amazon and banks like HSBC. So we feel that KII actually provides self-managed super funds with direct access into our best ideas. Also, we're listed on the ASX, so it's available during the trading times of the ASX, and anyone can buy KII through their stockbrokers.
And how does this differ from other listed investment companies on the ASX?
Most listed investment companies tend to be closed-end funds. Money's raised up front, and at the time of listing, there's a fixed number of units that are available to be sold. Once listing commences, then the price of the LIC tends to be determined by the market. If there's more sellers than buyers, then naturally the price of the LIC can start to decline. If the selling starts to intensify, then you can have a situation where the price of the LIC actually trades at a discount to the net asset backing. KII, on the other hand, is an open-ended fund. And what that means is that we provide constant liquidity within 1% of the live value of the portfolio. So in essence, the value of the portfolio determines the price of KII, not the market.
And what benefits does this provide investors in terms of diversification?
KII is our only fund that actually has all 9 of our portfolio managers contributing to its construction. The portfolio managers can invest anywhere in the world, and the fund tends to reflect our very best ideas, so it's very much unconstrained. The other important thing is that if our portfolio managers can't actually find attractive stocks to invest in, then we can be patient and we can hold cash. But conversely, if markets look poor and we think they're in for a sustained downward trend, then we can actually short sell. And what that means is that KII actually has a lot of levers to pull, and just by that whole structure offers a lot of diversification.
And David, now to your financials. You've just reported your full year results for FY 2015. What were the highlights?
Yeah, the highlights for K2 Asset Management this year was that our revenue actually grew by 9.3%. That then translated in a net profit growth of about 14.8% and allowed us to pay our shareholders a dividend of 8.5 cents per share, which was fully franked. And at present our share price is around 70 cents a share.
And David, finally, what's your outlook and focus for FY 2016?
We're relatively optimistic about the year ahead. We're finding a lot of attractively priced companies all around the world, and we're finding these valuations stack up very well against other competing asset classes. In regards to our focus for the year ahead, we want to continue to find more like-minded investors, and we want to continue to grow into the self-managed super fund channel.
David Poppenbeek, thank you for the update.
Thanks very much for having me.